Mach Industries raises $300 million at $1.8 billion valuation. Quadrupling the valuation in 12 months shows backers care more about factory timelines than cleared leadership. 4 new sites plus the X-Quadrum buy give control of rocket motor output at a moment when demand is climbing from both Pentagon replenishment and commercial space. This forces Northrop Grumman to either match the build pace or cede ground on future hypersonic and tactical missile lots through 2026. Smaller suppliers now face acquisition pressure as the primes scramble to secure capacity. Unastella raises $24 million Series B for rocket launches. Domestic launch success last year already proved the regulatory path works. Even with the round complete, Unastella's total haul remains modest compared to peers chasing the same small payload niche. The electric pump development targets a cost curve that could open dedicated rides for constellations under 100 kilograms. This pressures Rocket Lab to defend its price position or watch Asian operators capture the next wave of university and startup satellite deployments. Expect launch cadence announcements to accelerate as the team moves from development to production engines. Maxwell Power raises $750 million for battery storage. $750 million in committed capital lets Maxwell underwrite projects that utilities have delayed for lack of balance sheet certainty. The financing vehicle changes how solar plus storage deals get modeled in boardrooms. This forces NextEra and other large developers to revisit their capital allocation or lose ground on the next round of utility RFPs due in the next 18 months. Regional grid planners will adjust interconnection queues accordingly before the current backlog clears. Speed Labs raises $6.5 million seed for sports tech. The modest seed suggests the engine can reach live event traction without first securing expensive league data rights. Real-time pricing during games opens a layer of in-play inventory that existing sportsbooks still handle through delayed feeds. This forces DraftKings and FanDuel to integrate comparable latency or watch the highest margin bettors migrate to faster platforms by next season. Ficus raises $2.4 million pre-seed for fintech. Pre-seed capital from 2 micro VC firms that rarely overlap signals carriers are finally willing to test digital tools on retained asset accounts. Faster beneficiary updates cut weeks from claim cycles that legacy administrators still process manually. This forces the largest life insurers to pilot similar portals or absorb higher lapse rates when heirs abandon paper processes in 2025. TrueLayer acquires In3. European payment networks just tightened another notch with licenses that were previously out of reach. In3's portfolio now sits inside TrueLayer's stack, which means banks using either will face unified pricing within 18 months. Stripe loses its easiest wedge into Dutch and Belgian merchants once the integration ships. The combined entity can now clear same-day payouts without third-party processors, forcing Adyen to either match the new speed or watch its mid-market share erode by Q4 next year. Velocio acquires Domain 6. Microsoft Partners just gained another scaled player in the mid-market services segment. Domain 6's certified staff now fold into Velocio's delivery model, letting the firm quote full lifecycle projects without subcontracting. Regional boutiques lose the overflow work they relied on from larger bids. The move also brings specialized healthcare vertical expertise that Velocio lacked. Dynamics 365 rollouts that used 3 firms now run through one stack, trimming timelines by a quarter and forcing smaller integrators to merge or fold by 2026. Alphabet plans $80 billion debt raise for infrastructure. This volume signals CapEx outpacing cash flow in ways that will hit free cash flow margins inside 2 years. The infrastructure spend targets new data center regions that Azure and AWS already occupy. Capacity in those zones has been the main bottleneck for enterprise deals. Google Cloud customers gain capacity guarantees competitors cannot match without similar leverage. Oracle must either issue its own comparable notes or accept slower enterprise win rates on large GPU clusters through 2025. Robinhood completes WonderFi acquisition. Retail brokers chasing growth outside the US usually struggle with licensing, but this deal short-circuits that for Robinhood. Canadian users now see Robinhood's full product suite without waiting for local licensing rounds. Wealthsimple loses its easiest path to US customers once the combined app pushes cross-border transfers. Expect the firm to file for additional provincial approvals within 6 months, accelerating similar moves by Interactive brokers. The acquisition also brings Canadian advisor relationships that Robinhood can leverage for its retirement products. ClickHouse charts IPO path with revenue growth. The CFO hire signals board-level governance is now ready for public scrutiny. Public market investors will focus on the service's attachment rate rather than the headline number. That metric has been the sticking point in every recent data infrastructure debut. Snowflake loses another reference customer for on-prem alternatives once ClickHouse demonstrates sustained profitability at scale. Expect the S1 to drop before the end of next quarter if the current burn trajectory holds and gross margins clear 35%. GM lays off hundreds in IT restructure. The cuts leave fewer engineers to maintain the dealer management platforms that still run daily transactions. Outside vendors inherit those responsibilities at the same time they are negotiating their own rate increases for the coming model year. Expect the first missed software patches to surface in regional sales reports by Q2 as the transition settles. Smaller dealers without dedicated IT staff will feel the friction first. Johnson Controls acquires Alloy Enterprises. Existing bids for commercial HVAC projects now face a single supplier with deeper vertical integration. Competitors who had counted on Alloy for specialized aluminum extrusions must line up new sources before their own contract deadlines hit next spring. That scramble adds weeks to lead times and narrows the set of projects they can still price competitively. Municipal and data center RFPs already in process are the first to reflect the new constraints. Samsung launches new Galaxy device line. Component orders placed for the refreshed lineup have already reserved key panel and memory allocations through the end of the year. Rival phone makers now bid against those reservations when they approach the same suppliers for their own mid-cycle refreshes. The effect appears in tighter availability and higher spot prices rather than in any consumer-facing feature list. Carriers with aggressive volume targets will absorb most of the resulting cost pressure. Qualcomm expands chip manufacturing partnerships. New manufacturing agreements pull capacity away from the smaller design firms that share the same foundry lines. Those firms now face either higher per-unit costs or accelerated timelines to qualify alternative processes at global foundries. The shift forces at least 2 of them to revisit tape-out schedules they had already locked for next year's mobile chips. Qualcomm secures its own volumes, but the ripple lands on design houses without long-term foundry guarantees. Intel restructures manufacturing division. Fewer process engineers on staff means slower response times when external customers flag yield issues at advanced nodes. Several of those customers are already modeling the cost of moving their next tapeouts to TSMC rather than waiting through extended debug cycles. The first visible move will come from the networking chip designers who signed early foundry deals. Intel's internal logic teams absorb priority, leaving foundry clients to adjust their roadmaps accordingly. Dell reports strong hardware shipment growth. Enterprise buyers are committing to longer refresh cycles that lock in server orders through the end of next year. Component suppliers now face allocation fights that favor those with dedicated capacity rather than spot market access. Margin pressure lands first on memory vendors once those volume commitments hit. Smaller rivals will see lead times stretch as foundries prioritize the larger player, forcing them to secure secondary sources or lose deals. The pattern points to tighter supply by mid-next year. Adobe releases Enterprise Software Update. Most teams already juggle multiple creative suites, so the real test is whether this update reduces that sprawl or simply adds another layer. Renewal negotiations will hinge on how quickly IT can measure actual usage against the added seat costs. If adoption stays below 60% inside the first year, expect pushback on the next contract cycle that hits margins directly. This forces Microsoft to accelerate its own creative integrations or cede more seats during the next procurement round. Stripe expands enterprise payments platform. Large corporate finance teams have spent years building internal reconciliation layers that Stripe's new tools now threaten to replace. The shift will surface only after the first full quarter of parallel runs, when CFOs compare error rates against legacy systems. If the savings materialize, expect procurement teams to renegotiate existing processor contracts within 6 months. That pressure moves straight to margin for every payments provider still relying on the old integration points, forcing immediate fee cuts before year-end. HP launches new printer and device hardware. Cost reductions in the new lineup come from fewer moving parts across both printers and laptops. That design choice will show up first in warranty claims once the installed base grows past last year's volumes. Retail partners will push back on inventory commitments if return rates climb above the prior generation. Component suppliers must now re-qualify cheaper parts or lose share to rivals that guarantee higher reliability. Expect the first sign in channel inventory reports by the second quarter next year. Salesforce acquires workflow software firm. Deal teams will spend the next 9 months mapping duplicate triggers and approvals that already exist in the main CRM. That cleanup work delays the promised efficiency gains until well after the next earnings cycle. Enterprise customers will demand single sign-on and unified support contracts before expanding usage. ServiceNow gains a narrow window to land new automation deals while integration noise peaks. The overlap usually shows up as slower upsell rates in the first full year after the deal closes.